I'm curious, from when you began your role at Treasury, when do you think you realized or even had the thought that we could be headed for a crisis like this?
Well, Andrew, really from the day I began, I was concerned that we were going to have a crisis because of the excesses I'd seen in the financial system. So, for instance, right after I was sworn in as Treasury Secretary and had the first meeting with President Bush and his economic team, which was at Camp David, and I was slated to talk about entitlement reform, and I basically said, I'd like to talk about something else. I came here to work on entitlement reform, that's very important, but I see great excesses in the financial system. I think we're due to have a crisis, and so we had quite an extensive conversation about that. The advantage of this was that we began to prepare right away. Our agencies and departments developed smooth communications, and which were invaluable later. But I had not seen anything or foreseen anything of the nature we had. I didn't think we were going to have the epic event, the once in every 75-year event that we actually had.
After Bear Stearns, what did you think was going to happen? Did you think it was over? Did you think it was just the beginning?
Oh no, there's no way we thought it was over after Bear Stearns. A matter of fact, as I look at Bear Stearns, I think Bear Stearns was a key pivot point and we dodged a bullet, a real bullet, and I'll talk about that in a minute. But no, after Bear Stearns, what hit us big time, all of us, was if an investment bank gets hit by a run in the middle of a panic, we don't have the authorities of the United States government to save them unless there's a buyer.
So you call, in that spring period, you have a handful of calls with Dick Fuld. What did you tell him?
Well, it wasn't just a handful of calls. I had 60 calls with Dick Fuld from the time Bear Stearns went down until Lehman failed. And other members of Treasury had plenty of calls also. I was very clear in what I told them. I said, we learned that the United States of America doesn't have the authorities to save a failing investment bank. We don't have the authorities, the emergency authorities, to guarantee liabilities, to inject capital. So, what you should be doing is you should be raising capital and you should be looking for a cornerstone strategic investor or working to sell the business. And we had plenty of conversations where we nudged him and even pushed him very hard to do just that.
And what did he tell you?
Well, he's an optimist, so he basically said, I've got plenty of capital. We don't have a significant risks, at Lehman, but I do recognize that the market is concerned. And remember, this evolved over a period of time. He would come up with these wacky ideas. From his standpoint, I'm sure they weren't wacky. I mean, he would talk about, he had this idea SpinCo, where he was going to put his bad assets, Archstone and other bad assets, in a pool and spin them off. And he would say, well, I want the government to guarantee it, or the government to put in capital. And we explained ad nauseum that the government couldn't do that.
Let's fast forward to now the fall of 2008. Fannie and Freddie have been taken into conservatorship, and now we're moving into that week where we're walking through into the weekend of Lehman Brothers. And
well, let me start even before then, for that week, to just say we were racing. I was racing to stabilize Fannie and Freddie before Lehman announced their third quarter earnings. So we were concerned about Lehman. I was very concerned about Fannie and Freddie. And Fannie and Freddie's 9 times bigger than Lehman Brothers. And any kind of failure or even a failed auction could do huge damage. But imagine if Bear Stearns had gone down or Lehman had gone down before we'd stabilized Fannie and Freddie. So I had been a bit naive, because when we got Fannie and Freddie done, and that was so difficult to get it done, and I thought so important to the financial system, I breathed a sigh of relief, and I was hoping, wow, maybe we've put out this fire. Maybe that this is such a strong signal. And of course, so all kinds of banks owned Fannie and Freddie paper, and I thought that would appreciate in value, that would give a lift to the industry, and that may have given a lift to Lehman Brothers. So instead, the market said, holy cow, if Fannie and Freddie has got these problems, just think how bad the situation must be at Lehman. So it actually had the opposite effect that I'd anticipated, but I can only say we were very fortunate to have got Fannie and Freddie done. Got them nationalized before Lehman came unglued.
So now let's walk into that weekend. You're on the phone with Tim and Ben, making plans to go down to New York,
Yep.
or come up to New York.
Right.
Bank America is in and around Lehman Brothers. You're about to bring all of the CEOs from the Wall Street banks together.
I was pretty sure of, as Lehman had gone all around the world, that there was no one that wanted to buy Lehman as is. People would want to buy Lehman if they could get help with the bad debt. So I made the point on that phone call that there would be no government money. What this was a tactic, and it was a tactic designed to increase our probability of having a successful deal, because I wanted the Wall Street to show up and be prepared to take enough of the bad debt that would have to be left behind, so that a buyer could be attracted and we could get a deal done with a buyer.
Publicly, the perception was that the government wasn't going to take anything on. That was more of a negotiating. That was a negotiating tactic because
that was a negotiating tactic, because if we hadn't done that, they would have all showed up thinking that the Fed is going to finance it, or somehow the government was going to take on these bad assets or guarantee the liabilities. And so that was a tactic. I remember talking with Tim afterwards, and Tim said, I wouldn't have done that, because he said, if there's an opportunity to do a deal, you'll be embarrassed, you'll lose credibility. And I said, that would be a high-class problem if we can do that. I'm trying to get through the night, and I don't want these guys showing up thinking that we're going to bail them out. Lehman going under was horrible. It hurt a lot of people at Lehman. It accelerated the panic, but we had three major institutions going down that weekend, and if B of A had bought Lehman, then Merrill would have gone down. It would have been worse because Merrill was bigger. Lehman failure actually jolted the political system and made it possible to go to Congress, get the TARP. It could have been a worse outcome that weekend.
Do you think without Lehman Brothers failing, the government wouldn't have acted?
Oh, Andrew, we couldn't have gone any earlier and with success and got the authorities we needed from Congress. I mean, even after Lehman Brothers and everything we went through, the House voted him down the first time.
Were you frustrated that people politicized the failure of Lehman and thought it was a choice?
Of course, but I'm not sure that was even politicizing it. I mean, I think people really did believe that it was a choice. I mean, we did so many, amazingly creative and difficult things with the authorities we had. And I thought we were sort of working with with baling wire and duct tape, but we'd done so much. I think people just expected us to do this and expected that somewhere the United States of America had to have the authorities to save a failing investment bank.
So fast forward, now we're on Tuesday,
Yeah,
and the government's going to have to bail out AIG.
right.
After the Sunday night and Monday where Lehman Brothers didn't get bailed out.
Right.
How did that weigh on you?
Oh, listen, I wanted to bail out or rescue any institution we could. Any institution we could. And AIG was a dramatically different situation than Lehman Brothers. We had a situation with AIG where the market perception was that there was this liquidity problem, serious one at the holding company, but that the insurance companies were well capitalized, they had independent ratings, and that they were solid. And the Fed was able to make a loan looking at them as collateral. And so the Fed made this judgment. I'm not saying it was an easy judgment for the Fed, but the Fed made the judgment that they could make a loan that where the collateral would be good. And what is more important in my judgment is the market accepted it.
Take us to that Wednesday and Thursday when you go to Congress.
We went up on a Thursday night and painted a very bleak picture. Talked about, that the fact that the markets were frozen, and that no matter what we did, the economy was going to turn down a number of weeks out, and that we really needed these authorities. And at the time, I remember it was late at night, Barney Frank said, this is going to be a very unpopular vote because you can't prove a counterfactual. And I remember asking him, what's a counterfactual? And he said, you'll never get credit from the American people for staving off a crisis that they don't see if you're successful, but we're all going to get the blame for the downturn when it comes. It seemed like an excruciating long time to me, but to get the authorities. But Congress acted, we got them in 16 days, which is lightning speed for Congress. And I actually think it's the last time we've seen the United States Congress make a consequential decision on a bipartisan basis. So I think that was sort of the best part of the crisis. I mean, we had 10% unemployment, we had 23 million people out of jobs, people lost their homes, their jobs, and this hit the people that were least able to bear it, those on fixed income, low income, so it was horrendous. But, I was thinking of a Great Depression kind of an event, which is 25%. That's 2.5 times greater. I was envisioning food lines in the middle of the night.
Speak to this, because it was an issue I know you had to deal with that week, which was the perception around your former role at Goldman Sachs, and therefore the relationship or conversations you could or could not have with Goldman.
Right. So, Andrew, let me begin by saying that when I left Goldman Sachs, I severed my relationship with Goldman Sachs. I was Treasury Secretary representing the American people. And that was going to be how I performed in that job is going to be my lasting legacy for good or for bad. I am a patriot, so I was working 100% for the American people. And, after I left Treasury, I didn't go back to Goldman Sachs, I didn't go to work for any financial institution. When I went to Treasury, I signed a ethics agreement that said I wouldn't work on issues that were particular to Goldman Sachs. And so and of course, anytime I did something to protect the financial system and the American people, it's going to relate somehow to Goldman Sachs, right? But it's not particular to Goldman Sachs. Now, my lawyers monitored this all, and there was a time during that weekend when they went and got the release so I could deal with Goldman Sachs and talk to Goldman Sachs if I needed to, because Tim Geithner had come to me and said, Hank, how dumb is this? How would you like to explain to the American people, if Goldman Sachs went down, and to say, well, I was on the sideline looking at it, I didn't do anything to protect you because I didn't ask for a release from my ethics agreement.
Do you remember getting calls from John Mack?
Oh gosh, yes. I had multiple calls from him. I had one early in the week where he said the short sellers were all over them, and Morgan was under huge pressure. And that was a time in which...
What did he want you to do?
Well, he wanted a ban on short selling. And we'd been looking at that anyway. And, I spent a bunch of time talking with Ben and Tim about it, with Chris Cox. And Chris Cox rightly had concerns about, how effective a ban would be. And I leaned on him and said, I think if we don't do this, I'm not sure there's going to be a market to protect anyway. I mean, we're not, some free market principles are out the window. Morgan Stanley goes down, it's going to be all she wrote. So we got the ban.
Tell us what it was like in the meeting in early October when all the bankers come down to DC and you say, we're giving you the money and you're going to have to take it.
One of the things that I'm absolutely the proudest of was something we did with the TARP authorities, which is totally unprecedented. We moved with lightning speed and we put capital in 700 banks. This recapitalized the whole financial system, but it was very unpopular. And rightfully so, the American people were unhappy that when the banks paid out big bonuses, the American people wanted us to punish the banks. And when I had to decide between doing what the public wanted and doing things that stabilized the market, I came down on the side of stabilizing the markets because I thought that's what it was going to take to really protect the American economy, the financial system, the workers, the homeowners, and so on. So that's what I did. I wish I could have done both. This was a very, very tumultuous time. We went around the table, and again, it was very important not to stigmatize this capital. I would have liked, as much as anyone, to put all kinds of restrictions on it, but then people wouldn't have taken capital because what we've learned is during a crisis, no one wants to be stigmatized and look weak. So every bank says, guess what? I don't have any problem. I don't need any help until they fail or just about to fail. So they came in and we went around the table, and basically every institution very willingly accepted this, with the exception of Dick Kovacevich of Wells Fargo. What I basically said, and I don't remember the exact words, was, listen, your regulator's sitting right there with you. Ben and Tim are telling you what you need. You can either take it, but if you don't take it and you can't raise the capital they tell you to raise in the public market, when you come back to me, you won't like the terms of the second helping. And so he took it, but it is highly, highly unpopular. And I looked at some polls when I left office that showed that torture, was less unpopular than the TARP. And because the TARP was so unpopular, I think it makes it much harder on those that come after us to do the kinds of things that they're going to need to do.
Today,
yeah.
Do you think we're in a better position than we were a decade ago?
Well, in some ways we're in a better position, in some ways we're in a worse position. So with regard to our banks, they're much better capitalized, much better managed, much better regulated. And a matter of fact, as I look throughout our financial system, I don't see a lot of vulnerabilities. Fannie or Freddie still haven't been fixed, but the government's on the hook there, so I don't see that leading to a crisis anytime soon. So there's less dry kindling around to start the fire, but I'm more concerned about the tools we have to put out the fire. Because one of the very biggest lessons from the crisis are, if you want to stem it, you got to come in with government force early on. And, it takes a while to get Congress to act. But I don't think Congress has learned that lesson, because they've taken away the authority the Treasury had to use the Exchange Stabilization Fund, which we use to guarantee the money markets. The ability for the FDIC to use their emergency authorities to guarantee the unsecured liabilities of bank holding companies. Tremendously powerful. That has been taken away. The ability of the Fed to make 13-3 emergency loans on a one-off basis. They can make it on a systemic basis, but on a one-off basis has been taken away. If they hadn't had that, I believe that Bear Stearns would have gone down, and it would have precipitated a huge problem. Now, we do have the orderly liquidation authorities that I really wish we had for Lehman. And I think it could have made a difference, a big difference on Lehman. But I have real concerns about how those might work in the middle of a crisis if they're used as Congress intended them to be used. The biggest regrets I have to do with communications. But I was never able to convince the American people that what we did wasn't for Wall Street, but it was for them.